episode 18. Today we have with us Ms. Rashida Adenwala, who will be speaking on SME IPO. I'll introduce her. Rashida Adenwala is a lawyer and fellow member of ICSI. She is the founder partner of R&A Associates, a firm of company secretaries established in 1996 in Hyderabad. She has over 36 years of experience in the field of corporate laws and is renowned for her innovative thinking, professional approach, and skills in negotiation, business planning, corporate law, initial public offerings, both main board and SME stock exchanges, and mergers and acquisitions. She heads the fundraising practice for R&A both in domestic and international markets. She has extensive experience in preparation of business plans, legal due diligence, drafting of agreements, cross-border transaction, and corporate governance. She is a regular speaker at various conferences and training programs conducted by the ICSI, FTA, APCI, ICAI, incubation cells, and other institutions. She is a certified trainer on corporate governance from the Global Corporate Governance Forum, an initiative of the World Bank. She has been conferred with the Proficiency Award by IPA Society of Education for her contribution to the company secretaries fraternity. She was also adjudged the best women entrepreneur in the field of corporate law by the Confederation of Women Entrepreneurs of India. She was elected as the first women president of the Indus Entrepreneurs Hyderabad chapter for the year 2023 in the 24 years existence of the chapter. She has conducted many mentor sessions for entrepreneurs and assisted various initiatives of government of Telangana to mentor startups. She is on the National Advisory Committee of Abhaya Foundation, a not-for-profit organization with the mission named Heart, to contribute in whatever way one can in the areas of healthcare, education, awareness, rural development, and transformation. And now I'm handing over this session to Ms. Rashida so she can continue with her knowledge, which she will be sharing with us. Welcome, ma'am.
Thank you so much, Zainab, for this introduction. I welcome one and all. A very good evening to all of you. Today we're going to discuss on the SME IPO. As you must be aware that right now the IPO are really hot, and we're seeing so many companies, especially small medium enterprises, who are hitting the market and getting listed. And right now the markets are absolutely booming with these IPOs. The reason being mainly is that the investors have now got the confidence in our MSMEs companies where they're really performing well. And normally what happens is that usually manufacturing entities and small business enterprises get very difficult to get funding, either from the banks because of not having the collateral, or from private equity investors where their main focus is mostly on innovations and high growth companies where the profitability is where they expect the profitability to be around almost 25 to 30% of PAT. Now, because that's the kind of returns they're looking at. In this kind of scenario, getting funding for small business enterprises, medium scale business enterprises, manufacturing enterprises was finding it very difficult. And that's when the stock exchanges came out with this SME platform for listing of the small companies and being able to give them the access to the funding through public. Initially, of course, it was a very slow start. This has been in existence for more than 7-8 years, but only last 2 years, we see that the SME IPOs and people are genuinely getting funding from these investors through this SME platform. So I will share a short presentation on what are the requirements for an SME IPO in terms of the criteria, what are the advantages of the SME IPO, what are the challenges and the process and of the entire process of how does one go to the SME IPO. If you have any questions, you can please put it in the chat box and we'll be happy to take the questions towards the end of the presentation. So just give me a moment to share the presentation. I hope you can see the screen.
Yes, ma'am.
Yes, ma'am. Okay. Great. So what is an SME IPO? I mean, basically, so as I already just explained that, it's emerged as a response to the challenges that were being faced by the small, medium enterprise companies to get, first of all, listed on the main board, because the listing criteria for the main board has become quite stringent, and also because they were not able to get funding from other sources. So this is, the raising of public through the SME platform. This is, of course, opportunity for entrepreneurs to secure the equity capital for growth and expansion. And we know that traditionally SMEs have, secured or historically traditional funding through banks, but given the situation today, and especially with so many companies going to NCLT, going into insolvency, even the banks have become very stringent in providing funding. So this way, by getting listed, it actually improves their financial health and also credibility in the market. So let's look at the benefits of the SME. So one is, of course, access to capital. It's very, you get as much of capital that you need from the market. And once you are listed, and if you continue to perform and your pricing of the shares and the valuation keeps increasing in the market because of your performance, the access to capital becomes more and more easier. Keep raising funds either through placements or through follow-on offers or rights issue, and you can continue to get capital as you scale and grow. And then you also get the chance that, within 3 years from the listing, you get listed on the main board. So this is a very good entry to get onto the main board for listing. As I said, it creates a lot of visibility and credibility to the enterprise, not only in terms of, from the perspective of just being listed, but also even in the customers, clients, vendors, there is a lot of credibility because all the information, there is more transparency since you have to give a lot of disclosures, once you're listed. So they have more faith in your company, and they know that, since there'll be a lot of disclosures and there is an authority which is also kind of monitoring the progress and performance of the company, so it gives more credibility. Operational excellence, in terms of, obviously, because you will continue to perform since you're listed, you would want to make sure that your performance, and since you have the money, you can definitely do much more. You can expand, you can diversify, you can consolidate, a lot of things that can happen. So I was talking about, in terms of liquidity. So it offers liquidity to the investors. Obviously, the investors are more happy to invest because they can exit anytime they want. So that's another plus point. It is less stringent. So when we talk about SME IPO, in terms of the compliances, it is much, much less stringent than a main board. And disclosures are also only half-yearly disclosures. We don't require to do every quarterly. The requirements in terms of even at the time of listing, it's not as stringent as, of course, there are a lot of documents which the merchant banker has to go through that in terms of diligence and all that, which I'll come to you later. But it's not that stringent as a main board IPO. And of course, it lowers your debt burden because of the fact that you can leverage your balance sheet in terms of instead of heavily depending on debt, you can get more equity, and then of course you can even get further debt funding because you have a larger way to leverage your the capital. So this is mainly the in terms of the benefits of an IPO. Now, what is the eligibility criteria? So there are, so as you know, we have two stock exchanges, the National Stock Exchange, which is one is the Bombay Stock Exchange and the other one is the National Stock Exchange. So these two stock exchanges are now the only stock exchanges which are operational at the national level. So earlier we used to have regional stock exchanges, but these now have been done away with. So we have only these national stock exchanges, which are the two of them, Bombay Stock Exchange and the NSC and BSC, as we call it in short form. So while each of them have an SME platform, BSC has its own SME listing platform, NSC also has its own listing platform, and they also have their own criteria for listing. We also have to follow the criteria which has been given under Section 229 of the ICDR, which is the by Securities Exchange Board of India, SEBI. So as per this regulation, the main criteria is that there are only few things, but that is the minimum application for an SME IPO by any individual or a company has to be minimum 1 lakh rupees. Unlike main board where you 25, 40, 50,000, whatever it is. But the main another added advantage or the plus point is that underwriting, it has to be fully underwritten by the merchant banker. It is 100% mandatory to be underwritten by the merchant banker. So that's the advantage of the IPO in terms of underwriting. The market making, has to be done by the merchant banker. So you have 3 years compulsorily, you have a market maker who will ensure that your price is under control, and they will, in case if there is any huge fluctuations, the market maker will try to control it and help you to regulate the prices so that there is not much of a dip or too much of an increase in the price of the company, but slowly and steadily the prices will keep on increasing based on the performances. And the public shareholding is minimum 25% has to be done by the public. So this is basically the main requirements of the eligibility under the regulation 229 of the ICDR. And minimum subscribers for a IPO, we have to have minimum 50 investors. Unlike a main board where you have to have much larger investor base, depending upon the size of the IPO. In this case, it is much, much lesser. Coming to the eligibility criteria of BSE, so we have, this is very important, is the post-issued paid-up capital should not be more than 25 crores. So if you are raising any equity, if your paid-up capital is anything between 1 crore to 25 crores, then you can list on the BSE stock exchange. If you want to, obviously if your paid-up capital is less than 10 crores, then you have to list on the BSE stock exchange. But if it is between 10 crores to 25 crores, you have an option to either list on the main board or on the BSE SME stock exchange. So this is as far as the listing is concerned. Now let me explain you what do you mean by paid up capital. So paid up capital is only the total number of shares which you have issued multiplied by the face value. So if you have issued, say, about 1 crore shares at the face value of 10 rupees, then your paid up capital becomes 10 crores. But you could have an issue size of more than 40, 50 crores, because of the premium amount, because your share price, you're not going to issue it at 10 rupees face value, but you may issue it at 50 rupees, 60 rupees, whatever will be your valuation of your company. So you can raise up to 100 crores on an SME stock exchange, but you have to ensure that your paid up capital should not be more than 25 crores. Then only you can list on the SME stock exchange of either BSE or NSE. BSE, the net worth requirement is that you should have minimum net worth of 1 crore for 2 full years prior to the year of listing. So suppose if you're trying to list in this current financial year of 24-25, then your March 22 and March 23 financials should have a net worth of at least 1 crore rupees. So this is the requirement for BSE. So where your net worth has to be positive and more than 1 crore rupees in the if you want to list on the BSE stock exchange. The other requirement of the BSE stock exchange is that at least for the last preceding full year, your net tangible asset, means the investment in the tangible asset after depreciation, should be at least 3 crore of rupees. And the track record of the company should be that it should have been, in existence for at least 3 years before you get into the listing. So you should be in existence at least for 3 years. Now, suppose if there are many questions asked that, what if I'm an LLP? If I am a limited liability company and if I need to raise money, can I do so? Yes, you can. You have to convert your company into first of all, into a public limited company. So first convert the LLP into a limited company, which is very easily doable. And then whatever is the period you were exiting as an LLP will be counted for this track, for the track record. So it's not that suppose if you're an LLP and you convert now, it does not mean that now that you become a limited company, you need to be in existence for 3 more years. You can go ahead and still go ahead and list because you have just converted from an LLP to company and they take cognizance of your existence as an LLP. Only if you're an LLP, not a partnership firm. So this is one as far as the track record is concerned. And earnings before interest, depreciation, tax, that is your EBITDA, has to be positive 2 out of the 3, including the preceding financial year. So that means you should have been EBITDA positive in the last financial year before you go listing, and any of the 2 previous financial years. So that means if in 21-22 your EBITDA was positive, 22-23 your EBITDA is negative, but 23-24 again your EBITDA is positive, then you can definitely list in this current financial year. So this is as far as BSE is concerned. So BSE is a little more stringent and has the requirements. Now we come to NSE. So the eligibility norms for NSE are a little less stringent. They are not very specific about the numbers. So as you see, of course, the post paid up capital cannot be more than 25 crores, which I already explained. But net worth, they only need it positive. It's not that they have to have minimum 1 crore as the requirement of BSE. It says that it should be a positive net worth. So even if you have 25 lakhs is a net worth, you can still list. Net tangible asset, again, there's no such requirement. So this becomes very, very friendly for companies which are small enterprises, which are into service industry, where there's not much requirement of, heavy assets to be invested in. So therefore, many of these small IT companies and all of that get listed on the NSE because, of this net tangible asset requirement not being there of minimum 3 crores. And also the requirement of a positive net worth of not more than 1 crore. There's no such requirement. So there are a lot of companies which are getting listed, and NSE anyway is a preferred platform for even the investors because they are more comfortable in terms of NSE because their diligence of the NSE is far more, better Then what of BSE? So people also prefer to get listed on NSE. The other requirements are that the applicant company should not have been referred to a erstwhile BIFR, or no proceedings have to be admitted under IBC. So this is also one requirement. Obviously, obviously if you go to BIFR or IBC only if you're in insolvency when your net worth is negative. So, but anyway, they've mentioned this criteria. And also that the company has not received any binding petition. So this is as far as the NSE is concerned. If you have any queries, questions, please do put it down in chat as you're seeing the slides, so that you don't forget, and I can address your queries at the end of it. But should anyone want to ask any queries, please stop me. I'm happy to answer even now, anytime. So it's up to you whenever you feel convenient. So these are the parameters of the just a quick kind of distinction between what is main board and SME exchange. So as I said that for the main board, minimum you need to have 10 crores, okay, of paid up capital. But so if you don't have a paid up capital of 10 crore in your company when you're going for an IPO, then you cannot list on the main board. For SME exchange, minimum requirement is 1 crore. For the post-issue paid up capital, I'm not talking about pre-issue paid up capital. Pre-issue paid up capital, as I said, net worth. So even if your capital is 25 lakhs and your reserves is 1 crore plus, you still can list with a 25 lakh capital. But after the paid up, once the issue is done, minimum post paid up capital should be 1 crore for an SME stock exchange. But for the main board, you need to minimum 10 crore has to be the paid up capital. Minimum allottees in the IPO, as I said in the main board, you need minimum 1,000, but for SME, you just need 50 allottees. As far as underwriting, no, it's not at all mandatory, but 50% compulsory subscription by QIBs. As far as SME, so 100% mandatory. So that means if once you come on an SME listing, it is guaranteed that you will get your money, because even if the investors don't subscribe, the merchant banker has to subscribe. So there's no question that your IPO will fail. So it will definitely go through. IPO grading, it is required for a main board. So you need to get your grading of your company from one of the reputed graders, but it is not mandatory as far as SME is concerned. Track record, very stringent norms, very relaxed norms as far as track record is concerned. The offer document is vetted by SEBI for a main board. So which, I mean, they take a very, very long time. But in an SME exchange, it's only by the exchange. So if you're going to list on NSE, then only NSE will review your document, vet the document, raise the queries, if any, and will give their approval. So SEBI is not involved, so therefore the process becomes much faster. IPO application size, you can do 10,000 to 15,000 rupees, but yes, in SME exchange, minimum 1 lakh rupees has to be invested by an applicant. So this is one negative point of an SME stock exchange. IPO time frame, so I wouldn't say, I mean, here, though they say 6 months, but realistically, if you want to raise on a main board, it will definitely take anything between 10 to 12 months for a main board listing. And for an SME exchange, while we can do it in 2-3 months, but realistically, again, now considering the, the various other challenges which we are facing in terms of the ROC approvals and conversion and all of that, it would take you at least about 4 to 5 months to, but within 5 months, definitely you can, try and list on your listing. So procedure for SME listing is, well, I'm just going to give you an overview. I'll go through each one of them in the coming slides. So first and foremost, you have to go through the due diligence. Then, you have to restructure your capital. I'll explain what that means. Then you appoint all the intermediaries, the valuation of your company, and then freeze the issue price, prepare the prospectus, file the prospectus with the exchange, get the approval from the stock exchange, and file the final approved prospectus with ROC. Then you open the issue, you get the money, you allot the shares, and then you comply with all the post IPO compliances. So this is the entire steps that are required in any of the listing, whether main board, SME, whatever it is. This is the process. So when it comes to due diligence, so what is due diligence? So basically, it's just a very meticulous way of, what happens is we do kind of a pre-IPO diligence. So to make you IPO ready. So it would be always advisable for you to, appoint some external consultants or company secretaries, who will be able to at least review all your documents, do a pre-IPO diligence to ensure that you are ready for IPO in terms of all the compliances, that all the documents are ready. Because normally what we see is that medium, companies, I'm sure you must also be experiencing with your clients if, as chartered accountants, and if you are an SME or MSME company founder, you really don't give much of, importance on the documentation part of it, in terms of the minutes, in terms of ensuring that, minutes are ready, statutory registers are properly maintained, all of those things, because you're a small company, founder driven company, and as long as your annual filings are being done properly, that's taken care of by your consultants or your chartered accountants, your auditors. So that's as long as it's private, there's not much of hassle there. But of course, under the Companies Act, you need to do all these compliances, but still, it's not that somebody will come after you or for those non-compliances. But once you're going for a listing, all of this is required to be in order. There are many times we find that certain things, like certain annual filings, also there are a lot of errors in the filing. So all of that can be rectified before you actually go ahead with the the process of the IPO. So this is one kind of a pre-IPO diligence which we do. And then what is the actual due diligence is that there will be a legal firm which will be appointed by the merchant banker, or the company will appoint, obviously, as suggested by the merchant banker, who will then do a proper diligence and give a report to the merchant banker, which will be part of the documentation, which will be filed with the stock exchanges, and the merchant banker will rely on that due diligence report to ensure that all the compliances are in that. So that's what the due diligence is all about. Then restructuring of capital, and as I would say, pre-IPO preparations. So when we talk about restructuring, so what happens is that many of these small enterprises companies, medium enterprises companies have been in existence for a very, very long time. And you have built in, there is a huge amount of reserves available in the company. While your capital base may be just 1 lakh, 10 lakhs, 15 lakhs, 50 lakhs, but you may have at least 10, 12 crores available as your reserves for the, because of the capital that you've built up over the years, the profitability that you have, converted into reserves. So normally what we do is try to restructure the capital in terms of by issuing bonus shares to the promoters, because they should benefit out of all the work that they have done over the years. So we normally go ahead and issue bonus shares. So for the issuance of bonus shares, you need to increase the authorized capital, you need to increase all of that. So the entire capital has to be restructured. Your similarly, you need to also ensure that your document, that is articles of association and all of that, align with the listing requirements. So all of that has to be done as part of the capital restructure and pre-IPO. So this is where we're talking about like increase in authorized capital, minimum promoter shareholding, conversion of the public, obviously you have to convert yourself into a public company. The board of directors is very important. So this is a very important point which you need to understand, is that when you are listed, you need to have a composition of the board of directors which comprises of the founder, the promoter directors who are whole-time directors or non-independent directors, and independent directors. So when we say independent directors, it means that those directors who are completely independent of anything to do with the company. They have no pecuniary relationship. They have no financial relationship. They are no way related with the founders of the company, so that they can take a very unbiased, view, and they can keep checks on the promoters. When in the board meetings, when the reports are submitted to them, so the investors can rely on them to ensure that uh, there is a good board and there is proper governance. So therefore you need to have equal numbers. So the composition is 50-50%. 50% is the founders, the promoters, or the non-executive directors, and 50% are non-executive, non-independent directors, right? So that could be like founder would have himself and his wife, who are the directors. Now, the wife probably may not be a full-time director, but is on the board. So because she is a relative, she becomes a non-executive, non-independent director, because she has a interest because of the relationship with the founder, right? So therefore, they become non-executive, non-independent directors. And so therefore, we need, if there are such two directors are there, then we need two independent directors. So it has to be 50-50% composition. Any which ways, we will require 3 independent directors, because you need an audit committee where you need to have 3 independent directors. You have to have so all of those requirements are also there. So minimum 3 independent directors is ideal. If you don't, then you can go with 2 independent directors, but preferably would be for 3 independent directors. Now, independent directors, obviously, there is a struggle to find good independent directors, but then as long as, your friends who are in no way related to you and all, but believe in you, you can bring them as on the board of directors as independent. Obviously, there is a lot of, as directors, they have certain rights, and they also have certain duties and liabilities, which has to be ensured, like in terms of, in case if provident fund is not being paid on time, statutory dues are not being paid on time, then even the independent directors can be questioned, as to why. So therefore, these independent directors ensure that at least all the statutory liabilities are paid, because otherwise they will also be held liable. So this is as far as composition of board of directors is concerned. Appointment of key managerial person. So now again, this is important. So what do you mean by key managerial person? I'm sure you would be aware of, you all must be all aware of it. So it's the CEO of the company, the CFO, the Chief Financial Officer, the company secretary. So these are the main 3 important key managerial person which have to be appointed. So, and they have to be, you have to file with the ROC that they have been appointed and they are the key managerial person of the company. So then, declare them as a key managerial person. So this is extremely important, as well as you need to have the auditor. The statutory auditor has to be a peer reviewed auditor. So if the auditor of your firm or company is not peer reviewed, then you cannot get the audit done by them. You have to appoint a statutory auditor who is peer reviewed. So this is another requirement. Obviously, you need to have all your shares in demat form. Anyway, now already there is a regulation on come wherein all the private companies which are not small companies or don't come under the definition of small companies, they have to compulsorily demat shares by 30th of September 2024, and going forward from 1st October, they cannot do any physical transfer of shares, right? Sell of shares. So you have to do it in demat form. So dematerialization of shares. So you need to get your ISIN number, get a depository. All of those things has to be done. You have to update your website to include all the investor information. and filing of all the necessary forms and all that. So this is as far as structuring and pre-IPO preparation. So this is the entire step. I think I'll stop here, and maybe if there are any questions, I can take. Okay, so I think I'll just move on.
Ma'am, I have a couple of questions.
Please.
Ma'am, one of the questions is that for your SME exchange, that is for NSE, is it supposed to be only positive net worth, or is it supposed to be positive net worth in at least 2 out of the 3 preceding FYs?
No, it's only positive net worth at the time when you're listing on the IPO.
Okay, so they don't look at track record for net worths as such
No.
in NSE.
No.
And ma'am, as per regulation 229 for IPOs, your
Yes.
company is only eligible for an IPO when the post-issue paid-up share capital is up to 10 crores. But if it's between 10 to 25, then we can also do it according to SEBI ICDR, but not an IPO. You said that the limit for the NSE listing, I mean the SME exchange listing, is between 1 crore to 25 crore post-issue paid-up share capital.
Correct.
In your earlier slide. So where is which regulation is the reference for the 1 crore minimum limit?
So the 1 crore under, so ICDR regulation talks about that if your post paid up capital, okay, is up to 10 crores, then you can only list on the SME stock exchange.
Okay.
You can't go on the main board. But if your post issue paid up capital is between 10 to 25 crores, you have an option to either list on the SME stock exchange or even on the main board.
Okay.
Right? So that's where the post paid up issue capital is there, right? So so and 1 crore minimum 1 crore capital requirement which is there is in terms of SME is part of the ICDR, wherein post paid up capital for SME has to be 1 crore, but it can be up to 25 crores. But if it is less than 10 crores, then it can be only done on the SME. I hope I'm clear on this.
Okay, so I'll just repeat it in case I got it correctly. You're saying if it is up to 10 crore, then they can list on an SME exchange. If it's more than 10 crore, only on SME exchange.
Yes.
And if it is more than 10 crores up to 25 crores, they have an option to also list on the main board other than the SME exchange.
Correct. So they can choose either they want to list on SME or main board.
Okay, but then for an NEC listing, they need to have minimum 1 crore of a paid up share capital. So like minimum 1 up to 10.
Correct? No. So NSC or BSC, either of them, both, right? So post-issue paid-up capital has to be 1 crore.
Okay, minimum has to be 1 crore for both BSC and NSC minimum.
Correct. That's right.
Okay. Thank you.
Right.
And the minimum what we can go for an IPO, SME IPO is 50 lakhs?
So normally 50 lakhs is really because your IPO expenses only comes to around 60 lakhs minimum, one-time cost because of the other things. So ideally, I would say that if you want to raise, anything, see, I have taken one company IPO which has raised only about, say, net in their hands, they've got 1.8 crores after the expenses. Okay. This was the least that IPO which I took to the public, to the market. This was in the year 20. They listed on 30th of September 2020. Because that person was just not able to get money from anywhere, and he somehow wanted to ensure that he can raise capital. So what was suggested by the merchant bankers and us is that, okay, fine, then whatever it is, since your your profitability is so low and your turnover is just about 2 crores, you can just barely raise about 2.3, 2.4 crores. And then net you will get about 1.8 after the expenses of the IPO, which he was okay with. But today what has happened is that, I can even name that because it's a public company now. It's called Contain Technologies. Today, that company, over the last 2 years, they have performed so well. And today, when they were listed, that was a 15 rupee IPO per share. 10 rupees face value, 5 rupees was the premium. Today on the stock exchange, I think it is around 95 rupees, the price, and they're raising about 20 to 23 crores as a follow-on offer. So this is the advantage of an IPO. So, so basically, but of course, even the merchant bankers now don't prefer to raise such low but that time in 2020, it was just picking up. So, it was fine. But today, merchant bankers also, with so many offerings and so many companies wanting to go IPO, they've also become very choosy, and they prefer at least minimum size of about 10 to 12 crores to be raised from the market, or rather than going for a small raise of 2-3 crores only, because it's not worth their effort. It's not worth the expenses and, kind of things. So I would say if you can raise about 10 to 12 crores, that would be ideal. That is gross, and then net you would get about, because I'll come to the costs also. So normally it's an IPO you can take it in the range of 8 to 10% of your gross raise is the cost of the IPO. But this is a one-time cost. After that, of course, it's all free money. So that's what it is. So shall I move on? So as far as the appointment of intermediary is concerned, so obviously the first main intermediary is the merchant banker. And the merchant banker will handhold the company right from the time of entire thing, like considering how to do the restructuring of the capital, what is the valuation. They will, go through the, and the valuation is also a very simple process, which I will come up to, how the markets work on the valuation.
Sure.
Hello. So, yeah, so then you have the merchant banker. They are the main person. They will do the entire end-to-end the process, right from pre-IPO to, preparing the prospectus, helping with the entire prospectus, building of the prospectus, doing the, even they will suggest which are the intermediaries to be appointed in terms of who can be your banker to the issue. They will select the market maker. Obviously, they will be the underwriter also. They will also suggest who is the best registrar and the share transfer agent who can work with you on a very timely basis. They all have, their own intermediaries where they're connected with. And then, they will also appoint a legal advisor to, do the legal due diligence. Obviously, you need a peer or reviewed auditor, and you need an ad agency because you need to, obviously publish the various newspaper publications has to be done. So these are the intermediaries that are involved in a IPO. So valuation and issue pricing. So currently, it's a very standard process of, so you go to any of the merchant bankers or anybody, normally they give a PAT, whatever is your PAT. So say if your PAT, profit after tax, is about, say 3 crore rupees. Then they will give you a 15 to, based on the kind of industry that you are, and also the percentage of PAT. So say your percentage of PAT is just 4 or 5% of your overall turnover, then they'll give you a multiple about 12. But if it is say 10 to 12% of your turnover, then they may increase the multiple to 15 multiple. If it is a little more, say, if you're in a tech industry and all of that, and maybe your PAT could be at least about, say 18 to 20% of your turnover, then they may even extend it to about 18 to 19 multiple. But average is 12 to 15 multiples. Mostly it's, manufacturing and industries where the PAT is between the range of 8 to 10%, 12%. So, you can expect a 15 multiple. So for calculation purposes, say if your PAT multiple is say 3 crores, so you get a multiple of 15, so 45 crores would be the enterprise value of your company, means the total value. Of that, you need to dilute minimum 26%. So 26% of 45 would be say about 11 crores. So this is what you can raise from the market in terms of the gross this thing. And then you say 10%, so maybe 1.1 crore would be your cost expenses. So net you would get about 9 crores in the company, 9.5 crores. So this is how the valuation and issue pricing works. A very simple. Currently, that's what any of the merchant bankers you go to would follow. Even SEBI and stock exchange, is standardized. And in case if there are any IPOs where the valuation is extremely high, they are rejecting those IPOs also because they don't want the investors to unnecessarily get cheated. So this is how the valuation works. Then the preparation of the draft prospectus. Now this is the most tedious part, where you need to have the full cooperation from the company management. Has to cooperate because every little document, everything about the company is written in the prospectus. Okay, right, about the about the company, about the promoters, especially the promoters. Now the very important critical thing is that not only the promoters information is required, but the promoters relatives information is required, and they need a declaration from the relative also that this is what their investments are, this is where they are directors in other companies, this is what their sharehold, if they're holding shares in another company of more than 20%, this is the so there are a lot of disclosures which are required from the relatives of the promoters, and the relatives would include the spouse, the children, your spouse's siblings, your own siblings. So the founders, so all of that is you require a lot of information, signed declarations. So that's where a lot of challenges sometimes people have, because sometimes they're based on the relationship with the within the family. If it's not too good, then again they get there's an issue because they're not able to get this kind of documents. So this is another drawback in terms of the challenge that we face, especially now with all these stricter, because so many IPOs are coming so slowly. Even exchanges are coming with more and more requirements in terms of disclosures, in terms of documents required. So they need a complete history of the company right from the inception. What are the products that you're manufacturing? What are the services you're giving? Who are your clients? Who are your customers? And in case if you want to, have your customers or some very important customers there which will get you value, then you need a no objection certificate from the customer saying that they don't have an objection for their name to be put in the prospectus. So whatever goes into the prospectus, whoever's name goes into the prospectus, you need to get an NOC from that person, so that otherwise that will not go in the prospectus because it becomes a public document. So the merchant banker has to be very careful that they don't put in any names. Tomorrow it shouldn't happen, so somebody will complain saying that how come my name was disclosed in the prospectus, right? So they need a no objection certificate. If you have subsidiaries, group companies, associate companies, all of those things has to be disclosed about the company. Then total industry, what is the industry like? What are these, SWOT analysis, all of those things. So the entire document prospectus is, if you would have already seen, is a 300 to 350 page document with all these details which are there. What is your objects of the issue? Why do you raising the funds? And once you have given the utilization of the funds, say, for example, you want to repayment of the loan. Sorry. So if you have to file the for the repayment of the loan, or you want funds to repay the loan, then all the documents related to that loan has to be given, has to be provided. Again, you have to get the consent from the bank that, they're willing to pre-close the loan. And then you're utilizing that money for that purpose only. Now, suppose if you deviate, suppose if you have raised money, say for investment in CapEx and for in buying some machinery, but you don't end up buying the machinery, but use it for working capital. So then there's a deviation in the utilization, for the money that you have raised. If there's a deviation, then you have to report to the stock exchange, and also you need to get the approval from the shareholders in a subsequent AGM, wherein this deviation has to be disclosed, and you have to take approval from the shareholders. So these are certain things which you have to be extremely careful about, into trying to, just randomly, you can't just give that, okay, I will use it. This is my objects and this is my utilization plan. And subsequently, after the IPO, I'll do whatever I want. You cannot do that, because you have to give all these disclosures to the stock exchange every 6 months till the entire IPO money has been utilized. Then you have obviously the capital structure, which we discussed. What is the total involvement? How did the capital build up in the company? How was it built up? When was the money come in initially? And if there were any transfers, what were the shares transfers? If all the documents were in place or not. Then the management, financials, then the issue information, obviously the structure, procedure, all of that. Legal information in terms of litigations there are, if any. See, this is all disclosure. So even if you have litigations, it's absolutely fine. It's not going to, hamper your IPO or in any which ways, as because the merchant banker anyway is aware of all of this. So it's just a matter of disclosure. So whatever litigations you have, it has to be disclosed. If you don't disclose, it's a problem. Because today in the world of just with one Aadhaar card, the stock exchange will be able to get all your history and everything, right? So they will know whether your GST is properly filed or not. Is there any notices received from GST? Is there any notices received from income tax? So all these disclosures are completely, you need to do it. There's no problem. It's not going to hamper, but you need the disclosures. Then you have to also have to talk about your risks that you go through the company, if there are any risks, anything. So all of this thing is what I mean, it's a much lengthier thing, but I just brought in some important points over here in terms of prospectus disclosures. So as I said, that then once your prospectus is completely ready, you have to, of course, the auditor, you have to restate it. Accounts also has to be there for the last 3 years by the peer auditor peer reviewed auditor has to restate the accounts for the last 3 financial years. That's also a requirement. Stock exchange is the only authority to approve the draft prospectus. The day you file the prospectus, the same day you have to display it on the website of SEBI, merchant banker, SME stock exchange, as well as, of the company. Then there will be an official visit by the officials of the stock exchange to your company. They will interview the promoters. They will, ask, all these questions that have already been disclosed. And once they're completely satisfied, then you will get the in-principle approval. Now, this process normally would take about 1 month to 40 days for this entire process to be done once you filed with the prospectus with the exchange. The pre-preparation time till you file the prospectus, that would, depending upon how you feed the information to the merchant banker, but that ideally would take about 3 to 4 months. We can do it in 2 months also if all the information is really given on time and there's full cooperation. We have done it. We have filed one IPO within 4 months also. So it's possible, subject to information availability. Once the final prospectus is approved, then you need to file it with the ROC within 7 days of filing with the exchange. So the moment you file with the exchange, the final prospectus, which is approved by the stock exchange with all the changes that they have suggested, once that is filed, within 7 days, you have to file the prospectus with the ROC. Once the ROC is filed, then we can open the issue after minimum 3-4 days cooling period is required, and then you can open the issue, but not less than 3 working days, and it should not be extended for more than 10 working days. But normally everything gets closed in 3 working days, because irrespective whether IPO gets subscribed or not subscribed, the merchant banker has to underwrite, so they will underwrite and close the issue. The moment when 3 days there, you receive the application money, and then within 2 days you get the listing approval. 3rd day you'll get the trading approval, and within that, after the trading approval, you have to, within a day of the obtaining of trading, you have to file, you have to allot the securities. So then the securities get allotted, and you have to file the necessary application form with ROC. So this is the post-IPO compliances, which has to be done. I think I'm already running short of time, so I'll quickly finish this. So you have to file Pass 3, you have to create a new BSE NSE logins. So you have to register on the SCORE platform, publish in the newspapers, have a functional website, and change the master data in the ROC, because now you're a listed entity. These are some of the compliances that have to be done once the IPO is done every year, annually. So you have quarterly compliances, half-yearly compliances, you have annual compliances, and you have some event-based compliances. So I won't get into the details, but yes, these are all the compliances that have to be done once you are listed on the exchange. So challenges, as you know, obviously you have the regulatory challenges in terms of all these compliances that have to be done, and in terms of the SEBI and all of those things. You have financial challenges in terms of when you say financial challenges, means that in case if you have not paid your statutory dues, if you've not, before the IPO, all of those things have to be done before you can even go for an IPO, right? So sometimes if funds are not available, then it becomes a challenge, because certain payments have to be done upfront and all of that. So you need to have a minimum buffer of money available to take you to an IPO. At least I would say about 15 to 20 lakhs required pre-IPO before you can hit the IPO. So that kind of expenses, because you have to increase the authorized capital, those fees have to be paid. Then you have to, of course, maintain the investor relationships, ensure that, because this is done by the merchant bankers, so not so much of a challenge. But yes, you have to ensure that the performance of your company is proper. You are showing, growth year on year, so that even the merchant banker then can maintain good relationship with the investors for further raising of capital. Volatility of the market, everybody knows, I don't need to discuss. And the global economic conditions also, we know that suddenly something happens or a pandemic hits, then anything can happen. So these are the risks and challenges. Cost of an IPO, as I said, so due diligence, pre-IPO preparation, about 10 to 12 lakhs. IPO, approximately 55 to 60 lakhs in terms of all your listing fees, intermediary fees, merchant banker fees, all of those things. And post-IPO is about annually, increase in your expenses will be about 12 to 15 lakhs for just maintaining your listing status year on year. Again, in terms of website maintenance, remuneration of independent directors, listing fees, auditor fees, because half-yearly disclosures are there. So all of those kind of things, so you have to take into consideration that there will be an excess expense of 10 to 12 to 15 lakhs annually based on that. And another expense, which is not here, is normally there is a commission and a brokerage fee, which has to be paid, which ranges in between the 9 to 15% of the IPO size, again, based on what is the valuation of your company, the risk that is involved, and all of those things. So this is the cost which involves in an IPO. So I stop here. Thank you very much for your patient listening. I'll stop sharing and maybe if there are any questions.
Thank you so much, ma'am, for the wonderful session. And the session was very much informative, and we all got the knowledge about the IPO. I will just roughly summarize the topics which you have explained in a very simple and a layman language. So, like we have discussed on benefit of IPOs, eligibility norms under BSc, NSC. Then you have also given us the detailed explanation on procedures for listing on SME, like due diligence, restructuring of pre-IPO capital, and pre-IPO preparation, appointment of intermediaries, etc. Then you also discussed on post-IPO compliances, risk and challenges, and at last estimated cost in case of SME IPO. So the session was very much wonderful, ma'am. If anybody wants to, ask any questions, so kindly raise your hand, kindly unmute yourself, and you can ask the question so ma'am can assist you with, and then we can end the session on this.
Good evening, ma'am. This is
Good
Vinod
evening.
here, this side. I have a question. I have rather two questions. First of all, thank you so much for a very, very, in fact, summarized presentation, which gives the overview of the topic. Really appreciate it. Ma'am, I have two questions. One is, uh, I understand that technology companies are more in demand and they are able to raise funds. How about non-technology companies, traditional, for example, textile, garment manufacturing, say real estate development company? Are they in demand? Are these companies, can they think of listing themselves on a SME board? That's one question, ma'am. Yeah.
Absolutely. So in fact, this is what the SME Stock Exchange IPO is for. If you see now, if you keep track of all the IPOs that are getting listed, there's so many manufacturing units companies have got listed very recently. So there are companies who are into manufacturing of automobiles, there are companies who are manufacturing of textiles, as you rightly said. There are companies who are into manufacturing small auto parts, they're getting listed. So any small medium enterprise where they're struggling to get funds, as long as they have the profitability, they have the visibility of their growth and scale, and if the merchant, I mean, obviously, today the IPOs are so hot that the merchant banker is willing to take any IPO because there are so many investors who are coming. In fact, I get a call practically every second day from various my known circles, that if you have a good company which is a profitable, we have investors, they want to invest in IPOs, so please get us list companies who wants to go listing. So this is the kind of demand that is there currently. And as long as you're profitable, you are doing good, decent profits, you can, list your company.
Thank you, ma'am. One more question. Uh, uh, is it possible when the companies grow, they listed, for example, on a SME board, but then is it possible when they grow, they can move to a main board once they are bigger companies, or is it something they have to stay with the SME uh, listing board within NSC or a BSc?
So they definitely can. In fact, that's the advantage of an SME, because you can really scale to the main board without much compliance is required, unless, so what you need to do is that, I mean, within it takes 3 years time. You have to be listed for minimum 3 years on an SME stock exchange to be listed on the main board. You can transition from the SME to the main board after a period of 3 years.
So typically, ma'am, is it like, for example, can a company raise funds for buying back its shares, maybe as a part of a restructuring? Is it something a feasible solution, or because that is possible, right? Because they need to do a buyback as a part of restructure and then give exit to few of the shareholders. Okay.
Yes, that is called offer for sale of shares. So you can, along with raising funds for the company, you can also do an offer for sale of shares of some of the existing investors who wants to exit, or promote. If sometimes even the promoters may be wanting to dilute and make some money, you can do that.
Somewhere in your presentation, you mentioned that if it's in the 10 crore sort of range, they have option to either list on a SME board or on a main board.
Yes.
Based on your experience, typically if company falls into that kind of a bracket, what is advisable? They should go with SME because it's more simpler, easier, little cost effective, or ideally, is there a clear benefit in terms of in case if they are eligible for a main board, they should go for a main board and not for SME, or vice versa?
See, I would say that the main board, you should only go for main board if you're raising not less than 200, 300 crores. Minimum ticket size for raising funds for a main board should be around 300 crores because it is expensive and there's a lot of stringency and all of those things. And investors also, because you have to get institutional investors, minimum 50% has to be institutional investors. Institutional investors are not interested in small accounts, right? So,
Yeah.
so preferably if you see main board IPO, roughly anything above 150, 200 crores is main board. Anything below up to 100, 110 crores, I would suggest SME.
Perfect, ma'am. Thank you so much for such an insightful knowledge sharing session and the presentation. Thank you again.
Welcome. Thank you. So there's a question, how much should be eligibility for a company for fundraising and filing and listing doing 10 crore turnover with PAT of 12 to 15%? How much should be eligibility for fundraising? So yeah, so if it's a 10 crore with a PAT of 15 means I would assume that they're doing about 1.2, 1.5 crore PAT. So for 1.5 crore PAT, again, as I said, you can multiply it by 15 times. So that would be 22.5 crores or something of that, right? Would be your total enterprise, and then you do a dilution of 26%. So about 5 to 6 crores you can raise from the market in this kind of a case. I hope I've been able to answer. Yeah.
So Rashida, Huzaifa here. I don't have a question but a compliment for an amazing session and so meticulous like always. And it was wonderful, Rashida. The detailing that you put out on the slides, and so many clients also participated today. So we would like to thank all of them, and we'll make sure that Rashida's presentation material reaches each one of you who have joined today in the session.
Absolutely.
If there are any more questions, we'll hang around, or we will allow Rashida and all the participants to exit with a vote of thanks. Any more questions, or Zainab, over to you.
So there is some question, one SME, which was for proprietorship 31st March 24, now convert into private limited, whether it can go for public in the next 3 to 6 months. So on the NSE, there is a saying that if the promoter has the experience, there is a possibility, but preference is definitely given if they have at least 2 years, because you need to have 2 years track record as a company, because LLP, since there is already and those financials are available in the public domain. In terms of proprietary, these are not available. So preference, very, very rare cases will it be possible, but otherwise, no, you need to have a track record. So 3 years is definitely required even if it's a proprietor. So I would suggest, yes, you require the track record. Right. Thank you. So thank you so much. And it was really a pleasure. And thank you, Huzaifa, for giving me this opportunity. I really appreciate it.
Thank you, Rashida. Thank you so much. And a warm vote of thanks to Rashida for being such a enlightening faculty today on the SME IPO subject. And we'll publish her connects and her presentation material to all of you. Thank you once again, everybody, for joining. Take care and good night. Bye. Bye, Rashida. Bye.
Bye-bye.
Thank you.
Thank you. Bye-bye.
Bye, everybody. Bye. Bye.